Hey, what is up, everybody? This is Evan Carthy from evancarthy.com. Today we are going to look at Tesla stock because I've been looking at the weekly and monthly charts just to see what long-term trends there were, whether it was to the buy or a short. Just wanted to see what was going on because obviously Tesla's in the news about every single day, whether it's Elon Musk or something that they're doing. Tesla is definitely one of the most popular stocks to trade in the world. And as you can see right here, what we're looking at is the weekly chart for it. And you can just see how it's pretty much had a parabolic rise here all the way down from 179 to the highs of around 966. Now it's sold off some. So what I'm going to do is show you kind of the history based upon the technical setups of what I look to trade, where it's been, and then also where it could go here in the future based upon the weekly and monthly chart, because there are two setups for it. Each of them are long setups, and they're showing buy setups that if they do go to fruition would probably put Tesla up around $1,200 or so. But let me show you how I came to that conclusion here real quick. So zooming out of the charts all the way down here to the lows of when the stock first went live around June of 2010, around there. So all we start doing is taking the Fibonacci retracement levels, drawing it down to the low right here, going up right there. Let me make it a little bit larger. So as you can see, using this one, that one came down to 5161.8, went up there and hit the target, so that one is good to go. So move that up to the low right there, and then what we'll do is drag this one up to the high. Now what happens next is the price comes down and hits the 78.6 level. Now as you can see, price did go back up there and complete it for to complete the target right here between the negative 1.236 and the negative 2.22 negative 1.272 Fibonacci extension level. But when price does this 78.6 level, I consider that a trend change. So what I would do is cut it out that way, start looking for it going down to the short side. You can see there was one right there, went down, completed it, so we'd move that down to right there, this down to the lows, and it came up at 78.6 and went the other way. So we won't do all of them just because, as you can see, they keep on coming up and come back down. So if we go back to this low right here, you can see, oh, nothing, hit the 78.6. So now we'll just drag it up, continue drag it up, nothing, 78.6. And here we go. Finally, the first kind of breath of life, even if it only ticked through by a hair right there. You see price definitely found some support at the 78.6, but then if you're coming back down the other way for it, using that low, price came up, hit the 61.8, came back down, didn't complete it down here at the negative or excuse me, the 1.272 Fibonacci extension level. So it missed finishing completing that setup. Didn't hit the 78.6. So the way I trade, I don't consider that a trend change yet to start looking for the short sides for it. So it held on by its nose. You can see that was definitely the low candle that got a lot of people out of their long positions that they're in right there, and never went back and broke it again. Came back up, completed the trade right up here. And so then what we do is we go take that low that it was right there, and we start looking for the next high pullback. But as you can see, price went parabolic from them, from about $45 before there's any type of pullback up to about $194. So when you have that, what I like to do, even though it did eventually come back and come close to the 50% level, which would be something that you could take for it right there, even though it didn't come quite back and hit it. What I like to do, again, what the person who I learned this from, gentleman named David Halsey from the website eminiaddict.com. I learned this from him, and I do use it in my trading. Just want to give credit where credit's due. I go to the last previous high, so we're looking at that swing high right there that we were at, that we used from the last trade for the Fibonacci levels. And I put the low right up there because what he calls this is kind of an expanding trade setup, Fibonacci setup right there. So that's what I like to do. And as you can see, price came down, hit the 50% perfectly, and this is actually a picture perfect 50% retracement trade to look for. It went down, hit the 50%, came back up, hit the target area between the 1.236, 1.272 Fibonacci extension area, and so that trade setup is complete. So then when you use an extension setup, you leave the anchor point the same. You don't move it again. You just leave it the same. It's different than what's considered what, again, David Halsey calls a traditional, where you measure it from the low pivot point to the high. But with the extension, you keep it as a high. You keep the high pivot point, and you just keep measuring high to highs for it. So that's what we are going to do for this one right here. Let's see what happens. So we move it up to the next high. Didn't come down close enough to hit the 50%, so we just look for the next one. There's the next high, came back down, still not quite close enough, and then bam, came down here on its second attempt, passed towards it, hit the 50%, didn't even tick down, hit the 61.8%, went back up, hit that target area for it. So again, this definitely down here, we have definitely found an anchor point down here that people are trading off of. And then we go back up here, move it up to the high, about right there. Price comes back down, hits the 50% level right there, doesn't even hit the 61.8 level. Again, this is obviously that anchor point way down there is definitely something a ton of people in computer programs are using to trade off of. Hits down there, skyrockets up out of there, hits the target exit right there, and continues to go even higher and higher and higher. So we just keep on swinging up the Fibonacci retracement level. And here is the very interesting trade that we have currently in real time right now. As you can see, price has skyrocketed down. I mean, there's gaps in the chart. There's a gap right there coming down towards it. And this time frame right now is a weekly. I'm going to go into the monthly here in just 1 second as well. Came back down, found some support on the 50, but then gapped down a little bit, went all the way back down, and now it's found support down here at the 61.8% level, and that's currently where we sit right now. So if this again is going to be the third or fourth time from using all the way down here at about $39.83, that pivot point low down there that we've moved several times, that has worked for 2 or 3 times in a row now. If it's going to work on this one right here, well then look what we have to look forward to. We're looking for the exits to be somewhere between about, I'm going to use the 1.272 because that's the one that's been hitting off of it, and it's actually been going higher, but this is the max exit level I look for in my trades, about $1,222. That is the current exit level from this trade setup to look for right there. Now, using this setup, in my opinion, my line in the sand, I would use this low right there as your exit level right there. I would probably have my exit. Now, I don't have any plans to get in this trade. I don't own any Tesla stock, and I have no plans to get in the next 48 hours. Just full disclaimer right there. But if I was, because this is a good area to get into, it is just south of the 50%, so the 50% would be my entry level to look to get in for, since it's a little lower than that, get you in a better price. I would have my exit just personally probably around $300. I wouldn't have it at the 78.6 level because as it's already shown, there's definitely some support right there. So just give it a little bit of breathing room. I'd give it just a little breathing room down here, about $300. Came out, took me out. But if that holds and it goes back up and hits this level right there, I mean, look at the risk reward. Let's just draw a little box right there. There's your entry level. Here is, let's get to about 300-ish right there. That's your stop loss. Then you have your profit target right there. Let's look at how much money that is right there. So in total, that right there is about $155 for your stop loss you'd be risking. And then profit potential for this trade setup, you're looking at about $762 right there. So let's just go back again. 151 is what you're risking, or what I'd be risking if I did take this trade. But you can, I mean, you can put your stop loss wherever you want for it, but that's just what I would do based upon what the price action that is already done. And then 762 is the X level I'd be looking for right there. So that's a, what, a 1, 2, 3, 4, about a 5-to-1 risk reward ratio right there. That's really good. So that's the weekly chart looking for Tesla right there. It definitely is in a long setup. Things I do look for when I'm looking to trade. Then also, let me just show you what it looks like on the monthly chart as well. Again, this is our extremely long-term time frames right here, but with the moves Tesla has done over the past about, what's that, 10 years or so, 10, 11 years, it's definitely very interesting. So, starting off here on the monthly charts, we'll just use the lowest low we have, which is right about down there. Come back up to this high. Let's see if this will work right here. Yes, it does. Perfect. Down to the 50% level. There's the high. Get the low a bit better. Low, high, comes down here 50%, goes up, hits a level, and then skyrockets off. So basically, we're going to do, I mean, the monthly chart is pretty much going to look the same as of right now as the weekly. So just using that low down there, this turned into an extension trade right here. Comes down, hit the 50, goes up, hit that extension, so draw it up. Don't come down and hit the 50. Comes down, hit the 50, hits extension. Goes back up, hits 50, almost takes 61. Doesn't hit it yet. Then moving back up again. Comes back down. Now this one did go, it goes back down. This one has gone a little bit lower than the weekly trade right there, because in the weekly trade we were in between the 50 and 61. This one did go down and pierce the 61.8 level, but again, that is why my exit would be a little bit wiggle room just below that one, around $300 right there, and then the exit would be up here at about $1,221 or so, something like that. So as you can see, for the monthly and the weekly charts for Tesla, they're both showing very similar buy setups. Now again, this thing doesn't work 100% of the time. Of course it doesn't, because one thing you have to look for is, okay, what's going on the short side right now? Because obviously it is a downtrend on the daily charts. Now it's definitely in a long-term trend. It's in a buy setup or a long setup for the longer term charts for weekly and monthly. But daily, on the other hand, let's look at this right there. So if we use this as the high, come back down right there. Okay, that obviously doesn't work out. Hits 70.6, that's the trend change. But it does come down lower, so we're just going to keep that as the pivot point, high up there. There's the low. Price does come up, hits the 50% level, skyrockets down off of it, hits the target entry right there. So then we go and move this, since this is going to be a traditional setup right here. We move, there's the new pivot point high, and now we just keep drawing the pivot point low down until where we're looking for retracement. So currently we are in a short setup on the daily charts. It hasn't gotten quite high enough to what I like to look for the retracement level. It got a little bit closer to it, then I would consider that close enough to get to the 50%. And it definitely could come back and reach the target level down right there. But that is something I look for. If we look for it the other way, we are also on the daily chart. Now, in the daily chart, the primary trend is definitely to the downside, but now it is getting into this 50% level. It is right on it right now. I can see where it stopped on it today, basically at about $459.75. So we'll see tomorrow if that's going to bring any buyers into the market so you can propel this up. If this does become a buy setup right here, now I wouldn't be taking this right here just because, again, we're on a more predominant daily chart downtrend right here. We'd be looking for the exit coming up here to be around $615, and what that also would do would trigger this short setup right here, where the exit for that would be down here at about $226.58. But that is on the daily time frame, and the longer the time frames are, the more weight they hold. So definitely with it being a buy setup, not only in the weekly, but in the monthly charts as well, those who serve the daily charts, even though the daily chart is in a short setup right there. So that is my view on Tesla right there. You know, if you're looking at it from a super long-term perspective for it, whether you're using the weekly or the monthly charts, there is some great room some great potential for a price based upon those two setups on the weekly and monthly charts. If those do come to fruition and they do work out, you'd be looking at your exits to be about $1,200. But also on the daily chart right here, it is in a downtrend on the daily chart. So if it does come up here and hit this level up here, that will initiate the next short setup for it. But then if you're looking for on the reverse side for daily charts going long, you are in a long setup right here. But definitely on the daily charts, the short side is the predominant trade right now. So this would be considered kind of, if you are trading daily charts, or counter trade to it. So be careful for that. But yeah, if you are looking for a stock with potential to give some massive profits, of course there's always risk involved with it right there. Then take a look at Tesla, because like I said, hopefully it made sense while I was explaining the method, the way I trade, and how this could be, a potential big gainer if this setup does work for it. But anyways, it's Evan Carthy, evancarthy.com. Take care out there. Be safe.